Okay, so candlesticks. Candlesticks are the basic building blocks of technical analysis. We can say it in a way because generally the most popularly used charting method is actually a candlesticks. So before getting into that, let's try to understand what is a stock chart. Like, how does a stock chart look like? So this is the agenda for the day. So we will understand what is the stock chart, then we will see a candlestick chart illustration like how it looks like, then anatomy of a candlestick, followed by degree of dominance of buyers and sellers. So yeah, a candlestick tells us important information about how dominant are the buyers and the seller. So there are two forces in the market, right? A selling pressure and a buying pressure. So which pressure is more dominant? This we can understand by looking at the candlestick, the type of candle that has formed on a particular day. After that, we will have live illustration of few of the common type of single candlesticks. Then we will have a candle by candle walkthrough of the same chart that we discuss here. So that will give you a very good idea about how to look at different charts. After this, I will also walk you through TradingView, which I feel is one of the best platforms for charting. Okay, so let's get started. Okay, this is how. So what is a stock chart? A stock chart is basically a plot of price versus time. So the y-axis will have price. So let's say here there is, let's say this is 100 rupees, this is 150 rupees, this is 200 rupees, this is, let's say, 250, and so on. So this is how the price is there. And here the time is plotted. Now time can be in any form. When I say any form, it can be daily, it can be weekly, it can be monthly, hourly, and as small as 1 minute also. So that is what we call as time frame. So here there is time and price. So a basic chart is, it includes the plot of time versus price. Now there are different types of charts, and this is where the things becomes interesting. So let's understand, why do people use charts and why does it work? So a stock will move in waves, right? It will go in an up wave, then down wave, and as it is shown. Or maybe it can, so see, this looks like a random thing. But if we try to understand it further, we see that the stock is completely going in an uptrend. This is one thing. Second thing is, from here to here, if we see, the stock has done nothing. It has just oscillated in a range. Okay. And similarly, we can find out how the stock price is moving. So this is one of the most important reason due to which people use stock charts. Also, price discounts everything. Now, what do I mean by price discounts everything? Let's say there is an event, and that event is priced into the price. Okay. So let's say an earning is about to come, or let's take the recent example of Corona. When the Corona news came, the stock market recalibrated, right? It crashed. So what does that mean? This means that market recalibrates, readjusts itself to the different valuations. And in a future point of time, if we have to see the chart of uh, this year, that is 2020 starting, we need not know that what had actually happened in that crash. Even if we see the chart and the pattern and the structure, we can still figure out that what can be the potential future move. This is how it works. Let's take two examples. Just a moment. Problem with this. Okay, so this example is about how the price was already showing signs of this news coming up. So the news was that the ethanol price rose. The ethanol price rose, and ethanol was already being used. I mean, it was suggested to be used for blending into petrol to make it a little cheaper. So if we see, the price fell from here. It tried, but it found a base here. So why did this happen for 5 months? Because someone or the other, probably some influential people, they already had an idea that this news is coming. And that's why they started accumulating here, right? And then after this, when the news break, this is what it happened. The stock comes down a little, and then this is the move. So if we try to understand how charts move, how charts work, and how the price moves, we need not have to track each and every piece of news. We can just see what the stock chart is telling us. This is because the big people, they move the price, right? So if their money is being flown into something, if they are trying to accumulate something, it's better that we be on their side. When I say big players, they can be high net worth people, they can be mutual fund houses, they can be institutions, they can be foreign investors, and so on. Okay, next one. Example 2. This example is related to how history repeats itself. So if we see this candle, and this candle here, let me mark it. See the structure. I am not saying that it will exactly repeat every time, but we can say that history rhymes itself. Rhymes as in similar structure will have similar kind of outcome. So if we see here, there are series of small candles and then a big candle. Similarly here, a series of small candle and a big candle. Here also a series of small candle and then a big candle. What happened after that? Down, down, down. So do we really need to know what happened here or here or here? Even if we see structure like this, if we know that these kind of structure are very potent for Nifty, so the moment we saw this, we should have known that market is going to show a down move after this. And then again, there are reasons where its validity will be gone. We will discuss that for sure. But the point is, we can compare the past structures and we can move forward. We need not really know that what exactly is happening. And basically, what I'm trying to say is it is good to know about the events or any happening that is that is there in the world, but then we need not know each and everything. It is there in the price. Okay, with this backdrop, let's move forward and try to understand what really is a candlestick. Okay, there are three types of charts. This is the line chart. So when we plot a line chart, it is basically we connect the closing prices. Okay, so let's say that a stock was at 10 rupees here, then let's say 18 rupees here, then 20 rupees here, then here it was like um, 18 rupees. Here, let's say it is somewhere 40 rupees, and so on. So these are the closing prices, like where the price closed at 330 every day, and that we connect to form a line chart. The drawback of this chart is we do not know what happened in the day. We do not understand how it worked in the day. I mean, were the buyers more active? Were the sellers more active? Or how it went? We don't know that. So that is the only drawback here. Now see, here the price closed up, but then there was a big down. Was there any indication here? This we can find out easily with the candlestick chart. A bar chart is similar to candlestick chart, but then a bar chart is less interactive, and then it needs a little more attention to understand this. I feel that candlestick chart is more interactive because it is two-dimensional view and it is very easy. Even if you squeeze down a candlestick chart, you will easily be able to see that. Okay, this is an illustration of how a candlestick chart look like. I have removed the stock name and everything just to have a view on it. So what do we observe here? If you see all of these candles, they have a different kind of structure, right? See, this, this, or maybe this. So all of these have different structures and they have different structure. That's why they give us different information. Also, you will see that there are also many similarities. For example, this and this are pretty similar. Similarly, this is also similar to that. And if you see this candle here and this candle here are pretty similar. So what I'm trying to point out here is that there are different psychological events that happen in the market, and we can easily decode that through a candlestick chart. Okay, let's move forward. So how does a candle look like? What are the different parts of a candle? A candle has 4 parts: open, close, high, and low. So let's open is the opening price, the price at which the stock or an index opened that particular day. So at 9:15, whatever is the price that will be printed here, right? So let's take an example for this. Let's say this price was 10 rupees. Okay. Now, this is the closing price. The closing price is the one that is last traded price that is at 3:30. Let's say this is 20 rupees. Okay. Now, this is the high price. High price is the price that the stock made in that particular day. Let's say this is 22. And this is the low price. Let's say this is 8. Okay. Well, so what do we know from this information? We know that the stock opened at a price and it closed above that. That is, the stock was trending higher that particular day, right? And it made a high but did not close at a high. It made a low but did not sustain at a low. We can say this, right? And a possible possible move that the stock gave in that particular day could be this. Let's say it opened at 10. It made a low of 8 whenever in the day. We don't care about it. Then it made a high of 22. And finally, it gave a closing at 20. Right? So this is how, now this I have tried to simplify here. So a candle gives you that information very properly. And then there are different closing prices and different length of these shadows. So these two pointers that you see here, these are the shadows, this part and this part. The length of the shadow and this is called the candle body, the close minus open. So these two give us very vital information. Now on a flip side, let's say if the stock would have fallen that day, then take that case also. This is 20, same values. This is 10, this is 8, and let's say this is 22. So in this particular day, what could have possibly happened? The stock opened at 20, it made a high of 22, it made a low of 8, and finally closed at 10. Right? So this could have been the possible trajectory that happened on that particular day. Okay. And if we see this from a buyer seller perspective, then what is happening here? The buyers are more active here, right? Because they are buying continuously. The price did not sustain at the low. It closed higher than where it opened. The flip side is here where same argument goes, and we can say that here the sellers were more active. Okay. So the way these price, the way they behave in the whole day, that gives us a very important information. And the size, the shape, and the type of candle, basically the size of the shadow, the size of the body, and the overall range of the candle. These gives us very vital and important information as to how the people are looking at the market right now. Okay. Well, these are the different types of candlesticks. Just a second, hold on. I am finding some issues here. Okay, better. Okay, let's say this is a candle. Now this candle can be red or green, whatever. Let's say this is the total length of the candle. Now, where the candle is closing gives us very important information about whether the particular day was bullish, bearish, or neutral. Okay. So when I say bullish, that means buyers were more active. When I say bearish, the sellers were more active. And when I say neutral, that means that was an indecisive day. Basically, buyers and sellers are confused what to do. And when does that happen? That happens whenever there is some important piece of information that is to come, whenever a market does not have any direction. So let's say budget is lined up. Now, there can be many important announcements in a budget, right? The union budget that comes up. Before that, you will see that the market goes completely sideways. These kind of candles will be formed and so on. Or let's say there is some election result is to come. No one knows what the outcome will be. So in such situations, or presently there is this RBI moratorium is going on. So if there are some expectation, the price will move. If people are clueless, it will again try to form neutral candles because they don't know. So the buyers are not aggressive, the sellers are also not aggressive, and finally the market is overall confused. Okay. Now, let's consider positive candles first. Let's say the price opens at this level and closes at this level. Here you will see there are no shadows. That is, the opening is equal to low and closing is equal to high. What does this mean? This means that the stock was bought for the whole day without a single selling pressure. You see, the stock opened at a low price. It kept on going up, and finally it closed at a high price. There are no rejections. These shadows basically mark rejections that it made a high, it could not sustain, came down. Here, there is nothing. So, this is the most bullish candle that can form. This is the most bullish candle that can form. On the flip side, this is the most bearish candle that can form. This is called Marubozu. Okay, a little background on Marubozu. Marubozu is basically in Japanese, it means bald. Okay, so I don't know why they tried to combine this wick to a hair, but okay, we can consider it like that. So Marubozu is bald, and this is a bald candle, this is a bullish candle, this is a bearish candle. So these two, whenever they form, and yes, the size is also important. So let's say one candle you get like this, and one candle you get like this, both same in nature. Obviously, this is more bullish any day. Okay, so let's say size is good, size is big, and just to keep a perspective, let's say 5 to 6%, and similarly here also 5 to 6% decline. So in that case, these are the most bullish candle. The second candle, belt hold. Belt hold is also a bullish candle, but if you try to understand this, the psychological aspect, it opened at a low. It did not make any new lows. It went higher. However, at the high, there was some selling pressure, right? If the price did not sustain at this level, that means there was some sellers who were coming in. Okay. So we can say that for the whole day, the price rose, but at the end, some sellers came here. What could be the possible reasons? The reasons could be some people tried to take profit because their target would have hit, or maybe some news would have come, whatever. But some sellers entered here. This is what is implied by this. Same psychology on the opposite side will be for bearish belt hold. Here the low did not sustain. That means some buyers entered here as well. Now hammer. Hammer is a very interesting candle. And you should never ever ignore a hammer. And why is that? Okay. Let's say this price, the open price, this is equal to 100. Okay. Let's say this low, this is equal to 95, and let's say this closing, let's say this closing and higher same here. So I would take that as, let's say, 102. Okay. Well, now what would have happened in this particular day? The price opened at 100. Sellers came in. They tried to push the price 5% down. That is 95. Now 5% is an example here. It could be anything. So here it became 95. Okay. Now here buyers emerged and they pushed the price to more than 7% up and closed it at the high. What does this mean? This means that there is immense buying pressure here, right? So let's say the stock was moving down like this. It continued its path below, and then somehow the buyers emerged and they took it the price up. This means that sellers have lost their power completely, and this can mark as an important reversal signal, right? Let me remove this. So this can mark as a very, very important reversal signal. Okay. The name is somehow not visible, but this is the flip side of a hammer, and it is called a shooting star. Sorry, my handwriting is very bad. Shooting star. Now, how to understand the psychology here? The psychology is similar. Price opened here, made a high, sellers came in, it fell. So the trajectory here, how would it look like? Price opened here, made a high, sellers came in, they pushed the price. This is how it will look. And similarly here, if we see price opened here, it made a low, and then it closed somewhere up. So these are the trajectories if you want to view it like this. Okay. Now how to see them in chart? We will discuss that when we walk through the chart. Okay. Now coming to the neutral candles, spinning top and doji. Why are these two neutral candles? Ideally, a spinning top and a doji should have equal shadows on their both sides. That is, this length would be more or less equal to this length, right? And the body will be generally small. A doji will have negligible body, and here there will be the body will be very small. Well, so as you can see, on this particular day, there is seller dominance as well as buyer dominance, right? So in such a scenario, basically, both are not confident. They do not know where to take the price. And that is why this kind of candle forms. What about a doji? A doji closing is almost, it looks like this in a chart basically. It will have a very small body. So let's say if opening price here is 100, this will be 100.5, and this would be around, let's say 105, and this will be around 95. So this will be very small. A spinning top will have some part of body. So let's say this is 100, this is 102, this is 105 or 106, and this is 95 or 96. So you get the idea, right? Okay. Now, one important thing, all of this can fail, right? Because we don't know that how the market will behave next day. It is just about probability. It is about how it can behave, right? The market is always a probability thing. So let's say this particular candle is formed, or this is formed, or this is formed. So you have to always work with a stop loss. Okay. Let me give you an example. Let's say the market was moving down like this. Now, one of these candles is formed. Let's say a Marubozu is formed. Now, how do we know that this is a proper reversal or not? That can only be verified if the price opens higher the next day. And this will fail when price closes below the low of this candle. Same for all three. Even if a hammer is formed, if the price closer opens higher on the next day, this is a fully bullish move. And if it opens below or closes below this, then this pattern is gone. Okay. In that case, what should be our stop losses? So if you are seeing a bullish candle, you have to buy above the high and your stop loss is below the low. Same for this, same for this. For a bearish candle, obviously, if you're seeing a bearish candle, you are betting on the downside, right? So you have to sell below the low and your stop loss will be the high of this candle. A little above high, not exactly. Same for this and same for this, right? Moment your stop loss is hit, you have to be out of the market. And if your stop loss is not hit, then it's your trade. Okay. What to do in a spinning top and doji? Well, it depends on where it is formed. Let's say there was a up move, then a spinning top forms like this. What does this tell us? This tells us that somehow the buyers have lost control, because after such a good move, why is there a confusion? Spinning top and doji are confusion, right? We just discussed that. So why is there a confusion candle here? If there is a confusion candle, this means the buyers are not sure of what to do next. And also it could be there is emergence of selling pressure. So whenever this candle forms, if it is in an uptrend, you buy above this with your stop loss below this. Or if next day price opens below this, so you sell below this and your stop loss will be the high of this. So in this kind of scenarios, you will have a trade of both sides. Okay. The same argument goes for doji, but doji is a little more powerful than spinning top. Why is that? Let's try to understand. After a big up move, if we have some part of body, it still means that buyers might be dominant. Or if it is a red big body, we can say that, okay, sellers might be dominant. So this somehow makes it a bit clear. But if a doji forms here, doji looks like this, right? If a doji forms here, this means that the price effectively closed wherever it opened. It didn't go down, it didn't go up. So neither buyers are confident nor sellers are confident. So this is a very powerful candle and we should always wait for confirmation. Okay, now let's go through some live illustrations, how it looks on chart. See, a Marubozu. A Marubozu is effectively a candle with no shadow or negligible shadow. So the three arrows that are marked here, these are perfect Marubozus. You see, this is bearish one, this is bullish one, and this is also bullish one, right? And you can see the effect after that. And we can also consider the stop loss. See, the stop loss would be here. Stop loss was never hit. And you have your trade. Similarly here, if your stop loss is placed here, below this, it was never hit. You be in the trade. Same thing here. You be in the trade. Right? Spinning top. Try to understand the places where a spinning top can form. On this particular place, it forms in between of a sideways motion. So there is no value, right? There is no value. This is like, पहले भी तो कंफ्यूजन था, यहाँ भी कंफ्यूजन है, एक्स्ट्रा क्या हुआ यहाँ? कुछ नहीं. तो इस स्पिनिंग टॉप की कोई वैल्यू नहीं है यहाँ पे. There is effectively no value of this spinning top. Okay. But this spinning top has value. Why is that? We see up move, a small correction comes, that is two red candles, and then we see this spinning top. Also, this spinning top has lower shadow bigger than the upper shadow, which means that buyers are more aggressive. I hope this point is clear why buyers are more aggressive. The price did not sustain at lows. It bounced from here. Why will it bounce when there are buyers, right? And it closed closer to the high rather than low. So there is a buying pressure that has come in here. And above this candle, this stock was a buy. And you can see 2 days of rally, right? Okay. This spinning top, again useless because it is forming in a range and it is giving us no information. This is again useless. So these three spinning tops are effectively completely neutral candles. But this spinning top, it gives us very important information. Okay. Similarly, if you see this spinning top, this gives us very important information. This is a useless candle. This is a useless candle. Okay, when I say useless, it is not just, it is not giving us any information. It is that it is not helping us decide anything. So if you see this candle, we had 2 days of up move, then price made a high. It is not able to cross the high, right? So this candle is not giving us any information apart from that, okay, high is not being crossed. Similarly here, it is in a downtrend. It is already in a downtrend. We see some buying pressure coming in here because this was a downtrend where there was no buying pressure. Price was closing at lows. Here we see some buying pressure coming in. Price goes a little more downside. And here we have a confirmation that buyers might have emerged because this is a green candle which is formed after 1, 2, 3, 4, 5, 6 days. Okay, so that's how we see the overall structure. I mean, connecting each of the candles to the next candle. Okay, hammer. Now, the psychology of hammer is, as we have already understood this, it opens as a price, it goes down, and then it closes somewhere up, right? This is Bank Nifty chart. And if you see this candle, this effectively has the same behavior, right? It opens like this, makes a low, and then finally it closes somewhere like this. So this is the open and this is the close. Because it is a red candle, so open is above and close is lower. Okay, this is low and here open is equal to high because there is no shadow on the upside. Okay, let's see one more example. This one. Here, if we see, this is a very, very, very powerful candle. And if you want to see, this low was never taken out. No candles closed below that apart from this one, right? So, what is the psychology behind this? We have a continuous down move. This is very clear. Now this candle forms. This kind of strong candle is not there anywhere. Probably this is the one, a bullish candle, big size. Apart from that, nothing. Here what happened? Price opened at this point. Let's say somewhere around 27,800 probably. It went down to, let's say, 26,800 here. And then buyers came in and then they pushed the price to almost around 28,000. So there is a jump here, right? So this is a very strong candle and this should have suggested anyone that buyers have come in and be careful to short this further. Short this as in sell this. There was no selling signal here and it was very clear that buyers have come. right? And if we see the low of this was taken out only by this candle, only by this candle. Apart from that, there were no closing whatsoever. So what was the rule for a buying after a hammer? You buy above that and then your stop loss will be below. So your buying point was somewhere here and your stop loss was somewhere here. Okay, so here it has stopped you out. These are some of the unfortunate situations that you will get in the markets, and with experience you would actually understand where to put your stop loss so that it is not hunted right away. So here the market hunts your stop loss and then it flies, right? But the signal was clear that buyers have come in. Okay, shooting star. This is the recent chart of Bajaj Auto. As you can see, this is 1st October chart. So what does a shooting star tell us? Shooting star tell us the psychology that price was not able to sustain the highs, right? If we see, this was one high that was formed, this was another high, and this was the third high. Okay. Now Bajaj opened here. It went up to make a high, but then sellers pressed this down and it closed somewhere here, right? So we have a big shadow here, which means that sellers are still dominant. Would you go and buy this share? I would strongly advise not to right away because there is still seller dominance. A buying can only happen here if this high is taken out and stock comes out of this. Okay, I hope these points are clear. Okay, this is the chart of Reliance again, and let's have a candle by candle walk like what happened since April to October. We see, if we try to analyze this chart overall, we see that this is going up. No problem in that. But the point is, when you are here, you do not know what will happen next. When you are here, you do not know what will happen next. So how do you interpret it? So let's try to do that one by one. Which candle is this? Belt hold candle, right? So this is a belt hold candle, which means this is a positive candle. And the structure would turn negative if there is a closing below this. Did not happen. The high was broken here with this candle, which is a Marubozu candle, correct? Marubozu candle is again a bullish candle. Now, this structure, when will this be invalid? When this low is gone. That didn't happen. Okay. Price kept on going higher. We have a bearish belt hold here, which is the strongest red candle since here, if you see, right? So we know that there are sellers that have come in, and now these sellers will be thrown out if this point is gone, right? That was taken out with this candle, and then we have a bullish Marubozu again here. So if you see, there are continuously strong candles that are forming in. This was the red candle, but it was invalidated. Similarly, if you see this area, there are very small red candles. That means the sellers have no power whatsoever. Going forward, you see one more big red candle here. This one. But what do we get in the next day? A doji, which means that sellers have come in here, but now they don't have any power. So this doji is very, very, very important. It is trying to say that the sellers are now confused whether to sell that or not. And probably buyers have also emerged, which was clear from this move, that buyers have come in, right? Now see, after this up move, we see two spinning tops here, two continuous spinning tops. This means that now the buyers are confused that whether to take this forward or not. And then you see a small dip here. Then again a strong candle. We cannot call this Marubozu because there are shadows up and down, but then this is a very strong bullish candle. And then Reliance goes in a sideways motion for like 1.5 months. Here there is no information, as in you see all the small candles, right? So this kind of situation, where does this form? This form whenever market is waiting for some kind of news to come in, some kind of information to come in. You see, this is one strong red candle, but there is no follow through. Here there is a spinning top. That's where the neutral candles are very useful. If they form after a strong candle, then you should be very careful that if this level is not breaking, that means there is a buying interest. And you see, after 5-6 days, it shoots up again. And now it has again gone into this sideways kind of zone. Okay, interesting point here. In this whole chart, did I discuss about all the investments and all the news and everything that is coming up in Reliance? Because we don't need to. It is good to know that what is happening in the stock you are holding or whatever. But then is it really required? It is not. Even if you see all the candles, you will know what is the structure like. Okay. Now, these were the single candlestick patterns that we saw, like how single candles and candle by candle, how they matter and how the things change, what is the psychology for that particular day. But there are also 2 and 3 candlestick patterns. Let me give you an example. Let's say we take these 2 candles, or we take these 2 candles, or these 2 candles, any 2 candles. Those are called 2 candlestick patterns. If we take a combination of 3 candles, that will form a 3 candlestick pattern. Okay. So those are the next thing that we need to know before going into broader structures like channels, head and shoulders, triangles, and so on. But these candles we need to know because they give us information about day-to-day activity, and if we combine 2 to 3 days activity, what is the likely thing like? I mean, how does it look like on a 2 to 3 days frame? And after that, the next step is to going to the higher level structures and seeing that how they move, how they look like. Okay. So our next session, that is next Sunday, it will be on 2 and 3 candlestick patterns. Before moving on to questions, let me quickly give you an overview of trading platform where you can go and trade. So this is tradingview.com. This can be anything. For me, it is set for UK. This is a free software, not software really, it is a platform, and you can just go there and type in tradingview.com. This will open. So how to do charting here? You can type any symbol here. Let's say same thing, Reliance. Names will come up. Open one. Then you need to click on to full feature chart. This will open in a new tab. Internet is a bit slow. Okay, and this is how you get a chart, right? Okay, so here you can then do all your analysis. Here you can see how the chart looks like. You can point into candles and so on. So you can zoom in, zoom out. You have different tools like a trend line or a horizontal line. So basically you just need to play around with this. And this is how the platform look like. I use this platform personally for my chatting. Okay, now the questions. We have a question. Can we spot a trend while look at the shooting star of buyers? What do you mean by that? No, we can if your question is can we find a trend by looking at a single candle? No, we cannot. So change in trend is a different thing than just a single candle. So let's say there is a continuous up move, okay? Um, let's say there is a continuous up move, and from there we see a single shooting star coming in. We just know that the sellers have come. We have no idea whether the trend will change or not, and that we will discuss when we will discuss about trend lines, support and resistance, and so on. So that will take some time. Maybe in next 3-4 weeks we will discuss. Any more question, guys? Do we need to see volume 2 to predict? Okay, someone has asked, do we need to see volumes 2 to predict? Okay, yes, we need to, but it is not really necessary. So for example, as you saw in the chart, the ones that we discussed, I was not seeing the volumes, right? So it helps, but then it is not necessary. And also sometimes there will be big spread of candles and then volumes will be very low. There we will know that the this is kind of a fake candle or something like that. So that is called volume spread analysis, and we will also be doing that again in a time of maybe 4 to 6 weeks. More question, guys? Doubts, questions related to session, unrelated to session? For option, do we need to see specific option chart or equity chart? Okay. Well, futures and option is completely a different topic, but I would like to address this. So for option, actually, there are different ways to do it. We can also do that with option chart, but option chart is very volatile. So if you are using an option chart, ideally it should be in the money option chart, first thing. Second thing is the the underlying stock chart or the index chart will also give you valuable information as to which option you should be trading, how you should be trading. So let me give you an example. Let's say you see a stock that is highly bullish, okay, and you see a Marubozu. Now you can buy an option above that mark when the stock crosses above that Marubozu with your stop loss below the Marubozu. Make sure that the Marubozu is not very big, otherwise your stop loss will be very far, and in that time option will completely decay. So as I said, it is a complex thing, futures and options. Let's see if we can address that. But first, we will try to address the basic technical analysis concepts. Any more question, guys? Any doubts? Okay, so let's close this here. And are you guys interested in a homework, small homework? So what I would suggest is open a chart as I showed through TradingView, any chart, okay, and whichever is your favorite stock. It can be any stock who no one has heard. It doesn't matter really. So open the chart and try to spot all the candles we discussed. Just mark them and then upload its image on the Facebook group. Okay, so let's do that, and it will give me an idea that how effective the session was, and it will be a very good practice for you as well. So let's do that. Let's upload at least one chart per head and see how it worked out. Any doubts you can ask me, you can put a post in the group also, or you can go through this video again. It will be available on YouTube, my channel. If you are not subscribed to it yet, please subscribe, because there will be other videos apart from this as well. Okay, so I will be making videos. I used to make weekly analysis, right? So now I will try to make those weekly analysis in the form of videos, so that it is easier to track and it is easier to organize as well. I mean, YouTube is much easier to organize as compared to Facebook. So Facebook interaction will keep going, but then videos will also keep coming, which will be through YouTube. So please subscribe to my channel, and let's meet again on next Sunday with multiple candlestick patterns. And please do the homework. That will be really nice. Thank you so much. Bye-bye.